Can $250 a month really make you a millionaire? It sounds impossible, but that's exactly what happened. I'm not selling you dreams. And I'm not asking you to become a financial expert. In this video, I'll show you how a simple tool, available to anyone, turns small, consistent investments into over $1.8 million. No risky trades. No watching charts. No economics degree. And here's the best part. You can start today, even if you're in debt or feel like it's too late. Stick around, because at the end, I'll also share my son's method, how he started building wealth with just $5 a day. Here's a question. What do Warren Buffett and everyday people like us have in common? Answer: time. Most people think investing means gambling or picking stocks. The truth? Markets go up, always, over time. Even after crashes, they recover stronger. Let me ask you this. If you had invested $250 per month into a broad market index fund for 40 years, how much would you have now? You'd be sitting on over $1.8 million. Remember 2008? Those who kept investing tripled their money. In 2020, while everyone sold in panic, those who stayed made massive gains. Now you're thinking, what if I start now? Is it too late? Keep watching. Let's talk steps. Step 1, before investing, build an emergency fund. 3 to 6 months of expenses. That's your safety net. Step 2, open a basic investment account. In most countries, you can use tax-advantaged accounts designed for long-term investing. Take advantage of them. Step 3, don't pick stocks yourself. Instead, invest in a simple index fund, something like the S&P 500 or a total market ETF. Which one exactly do I use? I'll reveal that later. And don't worry about when to buy, just invest the same amount each month. That's what my son does. $5 a day. Soon, I'll show you how. My son is 20. He asked me, do I need thousands to invest? I told him, no. What you really need is time, and consistency. He now invests $5 a day into a simple index fund. In just 3 months, he's seen small returns, but more importantly, he's building a powerful habit. One day, the market dropped. He asked if he should pause. I told him, no. This is a buying opportunity. That's the mindset that builds wealth. Buy when others panic. Stay when others run. Should you worry about market crashes? Surprisingly, no. There's only one rule that matters more than anything else. Time in the market beats timing the market. Yes, you'll see dips. Yes, your balance will go down sometimes. But if you stay the course, history says, you win. The key? Discipline. Stick to a plan. Invest regularly. Tune out the noise. This isn't a sprint. It's a marathon. You don't need a perfect strategy. You just need one that works, and to stick with it. And the exact fund I use? I'll share that in the next video. Real investing doesn't start with money. It starts with mindset. Start now. Start small. And make one solid decision. In the next video, I'll walk you through how to choose the right index fund for your age, income, and goals. So make sure you subscribe and turn on notifications, because the next step could change your life forever. If you're still wondering, why index funds? Why not individual stocks? The answer is simple: most people lose money picking stocks. Even professional fund managers, who do this for a living, often underperform the market. So why take the risk? An index fund is like owning a piece of hundreds of companies at once. Apple, Microsoft, Amazon, Google. All in one fund. You don't have to guess who will win. You own the entire race. And the costs? Index funds are dirt cheap. You pay less in fees, which means more returns in your pocket. Remember, high fees quietly eat away your money. Low-cost index funds. They let your dollars work harder for you. Now let's talk about consistency. Investing only works if you make it a habit. You don't need to be perfect. You just need to be regular. Set it. Forget it. Let time do the heavy lifting. Even if you miss some months. Even if the market dips. Just keep going. I told my son this. You're not buying today's market. You're buying the future. Think about it. The $5 he invests today could become $100 by the time he retires. That's the power of compound growth. So what should you do next? Start with what you have. Even if it's $2 a day. Open an account. Pick a reliable index fund. And begin. In a few years, you'll look back. And thank yourself for starting. You may be asking. What if I'm in debt? Great question. Here's the rule. If your debt interest rate is above 7%, pay that down first. Because that's a guaranteed return. But if it's below 4%, like a student loan or mortgage, you can invest while paying it off slowly. Now let's talk psychology. Most people don't fail because of bad investments. They fail because they panic. They sell during crashes. They chase hype. They try to time the market. Don't be that person. Be the one who stays steady. The one who plays the long game. Because the market rewards patience. So if you're 25 now, and you start with $250 per month in an index fund, by age 65 you'll likely have over $1.8 million. No luck. No genius. Just time, habit, and discipline. And here's a final tip. Automate everything. Set up automatic transfers from your checking to your investment account. That way, you remove emotion from the process. You don't need to think. You just grow. Remember. Your future self is watching. What would they thank you for? Don't wait. Don't overthink. Just start. The best investment isn't in a stock. It's in your consistency. Let me tell you a story. Back in 2008, during the global financial crisis, markets crashed. Everyone panicked. People sold their investments at a loss. Some even swore never to invest again. But do you know who made the most money? Those who held on. Those who stayed calm. Those who kept investing every month, even when it felt wrong. Fast forward 10 years. Many of those same index funds had doubled, even tripled in value. That's not luck. That's mindset. The lesson? Don't try to predict the perfect moment. There's no such thing. The perfect moment is always now, if you have time on your side. If you wait for the right time, you'll miss years of growth. So instead of timing the market, learn to spend time in the market. Your goal isn't to beat the system. It's to ride with it. And when the market drops, that's not a signal to run. It's a discount. The stocks are on sale. And smart investors buy more when prices are low. This is exactly how my $250 per month plan worked. Through every crisis, I kept buying. That discipline turned a small monthly amount into over $1.8 million. Not because I'm special, but because I stayed the course. If I had pulled out during a crash, I would have missed the comeback. So when people ask, what if the market crashes? I smile and say, perfect. I'll buy more. Let's break it down into steps, so you can start today. Step 1. Build a small emergency fund. Just 3 to 6 months of expenses in a savings account. This is your safety net. Step 2. Open a simple investment account. In the US, that might be a Roth IRA or a brokerage account. In other countries, look for tax-advantaged accounts. Step 3. Choose a low-cost index fund. For example, Vanguard S&P 500, VOO. Fidelity Total Market, FSKAX. Or your local equivalent. These funds cover hundreds of companies. So you're instantly diversified. Step 4. Set up automatic monthly investments. Even if it's just $250 per month. The magic is in repetition. Step 5. Forget the news. Ignore the noise. Don't check your balance daily. Just keep going. Over time, your small investments will snowball. And you'll begin to see something amazing. Your money starts working harder than you do. The first $1,000 is the hardest. The next $10,000 comes faster. Then it compounds. One day you'll look at your account and realize you didn't get rich overnight, but you did get rich. So don't worry about the perfect plan. Worry about starting. Because the best plan in the world means nothing if you don't act. Now that you know what to do, what's stopping you? Now let me share something personal. My son is 20 years old. One day he asked me, "Dad, do I need thousands of dollars to start investing?" I smiled and said, "No. You need consistency, not capital." So I gave him a simple challenge. Put away just $5 a day. That's it. He laughed at first. $5? That won't do anything. But after 3 months, he opened his account and saw his money growing. Not a fortune, but something more valuable. Momentum. It's like pushing a snowball down a hill. At first, it's small, barely moving. But with each day, it grows. And eventually, it becomes unstoppable. He started to see investing not as a chore, but as a habit. A part of his life. Now he's excited when markets drop. Because he knows that's the best time to buy. He doesn't fear volatility. He welcomes it. And that mindset is worth more than any dollar amount. So if you're just starting out, don't be discouraged. You don't need a lot of money. You need time, discipline, and a belief in the process. And maybe a reminder that even $5 a day can change your future. You just have to start. What if your future self is begging you to take that first step now? Let's wrap it up with one final truth. Wealth isn't built overnight. It's not built from luck. And it's definitely not built from fear. It's built from small, smart, consistent actions, repeated over time. The key isn't how much you earn. It's how much you keep. And what you do with it. I didn't become a millionaire because I knew the market. I became one because I respected the process. I set a system. I automated it. I stayed the course. And now, I don't chase money. Money works for me. You can do the same. So here's what I want you to do. Start with what you have. Set up a recurring investment, monthly. Choose a reliable index fund. Ignore the noise. And don't stop. And when you're tempted to quit, remember this video. Remember that $250 a month can turn into millions, if you stay the course.